Can we give Riley a round of applause, everybody, since she made the whole thing happen. That's a long round of applause. That's more than I'm going to get. Shit.
Standing ovation. Yeah. I mean, we can't really. I ate too much breakfast for that.
So we have from now until 12 o'clock. So we got an hour and a half. We'll take one little break real quick if you need to, but let's try to push all the way till lunch, and then we're going to do an hour break for lunch, 45 minutes for lunch, okay? There you go. So we're going to focus a couple more A setups, and then we're going to kind of transition into the B setups. That's where we're going to really break down some more of the parameters. So starting the day, where's our TDI and EMAs telling us to sell this thing? It's telling us to sell it, right? Right. First thing we notice, liquid 50s in the sell zone. Another thing we notice as we get closer to looking at the entry, notice the falling trend line. Big component of the whole thing. Again, a lot of these two candles that I've shown you on these A setups are two candles off the 21 EMA here for a new low of day. What do we like about that two candle formation? Give me some characteristics. Somebody, anybody. Good, what else?
Coming out from the 8 and the 21.
Off the 21, yep.
Under the liquid 50.
Yep. How about how price breaks these two pins? You see that?
Yeah.
Okay. But it's not super overextended.
Oh, you fix it. Good.
Yeah. So you see, two pins here broken. How about this pin as well? Broken when that closes. No wick. So it gives you a lot of confidence that that's a strong 15-minute push. The stop, 10 pips. Talk to me about exit signals here. It falls 38. You see I have the 38. Exactly. What else? How about 3R, 3.5R? You know what I mean? That's a good trade. So in a situation like this, even if you can, of course, we have the hindsight factor of this, but look at the end of the day. See where it finishes the day? It doesn't really push past this, right? Keep that in mind when we talk about these setups too. And I think you want to also, and this is where we get into the gray area that I want to talk about here because I feel like this is stuff I can't really put in courses. When we talk about this, like, what if you were looking at this and I covered all this? When you have that kind of an extension off the 8 EMA, more often than not, it's not going to keep going. This is where we got into, some people will talk about like the market wave theory, the Elliott waves, these waves. The market moves in waves. You can try to measure them however you'd like. I just think that I find the most consistency in it, saying to myself, how far away from the 8 EMA am I? Am I super far off the 8 EMA? Yeah. Then price is eventually going to have to go back to the 8 EMA. Whether it means that price kind of moves sideways and brings the 8 EMA to it, or if it decides to do what this did and come back up in 30 minutes. Either way, it gets itself to the 8 EMA. Exactly. So,
I can't believe this comes in.
yeah, exactly. But here, I think, especially for you, Scott, and a lot of everybody else who has the issue of like turning a winning trade into a losing trade, risk reward. Like, if you have 10 pips of risk on a trade and you're up 20, you better be 50% out of that position, in my opinion. If you get 2R off that trade, lock the stop, take at least half the trade off, and be grateful for that beautiful winner. And then try to manage it. Because if you locked your stop here, after this moved 2R and you see it goes 3R, where does this hit your stop? It doesn't. And where does it end up the next day? Looks like coming lower. Yeah. So again, when we're talking about in-trend setups, A setups, look at the liquid 50, look at the EMAs. More often than not, even if you deal with all this in between, that looks like maybe some news in there, right? During the New York session, right? You deal with all that. Where's the overall trend still telling you it's going to go? Down. Any questions on this one? Another one, two candle. Perfect EMAs, perfect liquid 50, right? Kind of referencing the dropping liquid 50. Look at this. That price movement, that sharp drop, will cause that pull down in the liquid 50. Does that make sense?
It's literally like an amoeba.
Exactly. It's how did you say it, Drew? It's like a reaction to it. Like the liquid 50 reacts to the price. Like here, how the liquid 50 falls, to me, that's a reaction to that price movement. So how would you describe that? Any other way?
It's a boat.
It's like a wave.
Yeah, the liquid 50 like a boat. I look at the horse, I like an arm that just pulls. Like it looks like the more unstable brother.
Yeah.
To like the more stable brother, and it just pulls them in a certain direction and stuff like that.
Yep. You got a question, Santiago?
It's like an A setup?
Yeah.
Or a B setup?
I would give it an A. What would you give it?
Like a B.
Why?
Not strong, doesn't come in like strong from the 21.
I would say it's pretty.
That's a big candle.
That?
It will be more like the previous one set up. That
Here-
one, no. Below?
The one off the 50?
That one.
This bar.
That one looks better. Why is the TDI looking like?
TDI at that point is not in the proper position. You see the RSI is under the trend line? And under the liquid 50. See how the RSI is not through? So you see how it pops right there? This is literally, like, listen closely. This is literally what's going on GCHF right now. On the G.
Okay.
Yep. So it'll look like a shift candle. It'll look like it's going to try to do something, but it's not ready. This is where you wait. And this is I know what you said it's not. This is off the 21. I want you to reprogram your mind. This is off the 21. This is something that is not strong to me. We broke the 50 and came back through. That's fine, but it's not an entry signal. The entry signal comes when the TDI is in the right position, which means RSI value above the liquid 50 and trend line right there, and with a candle confirmation off the 21 EMA. That's a really solid 2-candle formation. Why it's even more solid, it's a new high of day. Just barely, but it's a new high of day. So it's a 2-candle off the 21. Look at that really, really nice. See this hit here? See this hit here? See how first one's lower, second one's higher? Look at the RSI, lower, higher. No divergence there. Really, really nice to tell me we're bouncing off the 50, not that we're trying to come through the 50. That's even a situation where I would look for divergence in here on the 1 minute and try to see if we could buy it even lower. That's where I would get in what would look like off that 15-minute candle, off the 50. But I'm not. I'm going to the 1 minute, I'm finding divergence, and that's where I'm taking the entry. The 15-minute formation is, I want you to program in your mind, is only the one that's marked right there. That is the entry. 5:15, new high a day. Talk to me about an exit signal, somebody. Thank you.
Getting some divergence.
5R, overbought. Yep. Divergence. So Ryan said divergence on top. Look at the RSI hitting its high right here and then falling off. You see how that comes lower? Price action continued to go higher. So that would be divergence there.
Risking 7 pips and setting the first at least TP1 as a 15 pips risk.
2 to 1. More than that. Bro, you get 30 off of this thing. That's 4R. It's a good trade. Questions? Santiago, you with me?
Yeah.
I want to make sure you're with me. Good. Another one. 2-candle, off the 21, off the 50 with pins to the 50. Right? We like all those pins. Look at the previous pins. What do you know about it? Notice about it just off the jump. Look at the market structure through the Asian session into the London session. Look at the lower highs off the 50 with pins all to the same level. Here, 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 here. They're all pins, but where's price really moving? Down, making lower, lower highs and lower lows. Yep. Where's the liquid 50 tell us to trade it? Clearly short. Where's that trend line down here tell us to trade it? Look at that. Look how long it's falling. So as soon as the RSI gets under the liquid 50, you're like, I'm in this thing, right? So here's the first entry. Notice the stop here. See how I have the entry marked very close to that candle where it closes? See how the entry price is very, very close to it? That's not enough for the spread. The spread here is added on the top. You see how the stop is a little bit higher? I just put it in there. So here you're looking at like an 11 or 12 pip stop from that entry. Look at how for an hour, this thing literally just kind of pulls back and makes you question your entire existence as a human being, right? But what is it doing?
It's hitting that level again.
Thank you. Look at that level back here, the bottom of that consolidation at the Asian session. That's exactly where it pins to. Key levels, right? Asia low. What during this pullback? What in there? Sorry. What in there would tell you to close the trade?
Nothing.
Thank you. Nothing. Unless you get out on breaks of the 8 EMA. But how about that pin that goes almost all the way up to the open price?
Wait for the candle to close.
Wait, thank you. You wait for that thing to close. You don't get scared at 7:48. Talk to me at 8 o'clock.
Yeah.
Does everybody understand what I meant with that reference, the 15-minute? It's a problem for all of us. So,
Looking at a candle at 7:52 versus 7:59 at 8 o'clock.
yep, set alarms on your phone. Dead ass. Have it go off every 15 minutes, right before the 15-minute. A big thing with me, you remember when we were at T3? I was sitting in front of the screen from 5 a.m. to 10 or 11 a.m. every day. So when you're putting yourself under that kind of stress, like I was feeling very pressure, like very anxious, right? How do you think I'd act when I'm not myself, cool, calm, and collective, being pressured, having to trade, talking about everything, in a situation like that? I'd pull that trade. I'd fucking react terrible. I'd be out mid-candle. You got to breathe. It goes back to the visualization. Practicing, seeing this in your mind, seeing this pullback in your mind over and over and over. I'm not out. I'm not out. Where's the break of the 8? I'm not out.
Boy, I need that. I need that.
Now check this out. Let's say this is a nice one. This trade, you could pet it. It's a nice one. Why? It gives you another entry if you decide to get stopped out. If you decide to take out your trade on those pin pullbacks, I got another two candle for you right here. Same thing here. Look at the pin, right? Right to the top of that entry candle. Look at the pin. Where's the break of the 8 EMA, guys? There isn't one. Do you see it? No break. So from this entry to this entry, regardless of which one you're looking at, there's no break of the 21. 11 pip stop, this one goes 18. 8 pip stop, this one goes about 17. Just about 2R on both of them, right? Either one. The thing that I didn't mark up in the first one, look at the pin over here above my head. This starts yesterday's low. A lot of the time, everybody will say this is yesterday's low. It's not. I don't want you to think about it that way. For the purposes of this system, it doesn't matter if this is the low of day or if this is, because the low of day was started this doesn't work when this thing gets hit. I just tapped it with my leg. That's the answer. This low of day zone was started there. Does that make sense? Yeah. That's the fucking level. This isn't that much to me. It's not as important. That can almost be seen as like the broker sprinkling. Like that was the level. Price is never going to stop at the exact same price every time. You know what I'm saying? It can't do that. It's a zone. Everything is with zones. So there, 1, 2, 3, 4 times overnight from when it was set throughout the end of the day into the overnight, it bounced off that zone 4 times, right? Not a great sign that it's going to come lower. Overnight, it actually consolidates above it. Again, not a great sign it's going to come lower. So when you take the entry here, right? See that candle? That's right here. When you take that entry, notice that you're in the zone. That's probably why you have those pins. That's probably, always probabilities, that's probably why it's choppy. So then when you take this second entry, you know it might have to retest the top of that zone because you're in this price shelf, right? So you have to be willing to kind of give it that little bit of space, give it that freedom, and then it can actually breathe and actually move lower. So here, with the setup like this, inside the range, I would give this, other than the fact that you're trading in yesterday's low, again, an A setup. You get 2 jabs at this one. This is EuroCAD here on the same day, 10:23. 2:45 and then 4 o'clock. Cool? Questions? B setups. So these are probably the setups that we find the most. B and C setups. Those A setups are more rare, you know? But they're very important. And before we get into the B setups, I want to speak on this. You can't miss A setups, guys. As high performance athletes, traders, all right, I'm going to date myself here. If Jimmy Rollins, everybody remember Jimmy Rollins, the Phillies player, right? If Jimmy Rollins comes up to bat and they throw him a 60-mile-an-hour fastball and he doesn't hit a home run, sorry, let me give you a better guy, Ryan Howard, big home run hitter, Barry Bonds. If he gets a 60-mile-an-hour fastball over the middle of the plate and he doesn't hit it out of the park, can anyone in the dugout be happy for him? This is your home run hitting, all-star, steroid, jack the fuck up, best player on the team, just hit a fly ball to left field on a 60-mile-an-hour, the easiest pitch he's ever seen in his Major League Baseball career. What do you think they're going to say to him?
You missed it.
You fucked up. Yeah. You really did. When these setups present,
Don't miss it.
that's it. These are your 60-mile-an-hour fastballs. Win or lose, these are still your 60-mile-an-hour fastballs. You need to be involved in perfect liquid 50, perfect EMAs. You can't miss them.
How it will be the percentage of success on this type of 8 setups?
Way more.
Than 75?
I would higher than that. I would say your B setups are I would say B setups win 6 to 7 out of 10 trades. This A setups is 8 to 9. I'll never give it a 10 out of 10. You'll never win everything, of course, but it's hard to find perfect liquid 50, perfect EMAs with a candle off the 21 EMA that stops you out. And if it does stop you out, like this one might have, it's very, very rare that you don't get a re-entry. You're just early. Yeah. You got a question, Julian?
Yeah.
Yeah.
Looking at the trading journal.
percentages, you kind of look back over a quarter, your eight setups
versus B and C? Yeah. I would say probably, because I looked at this the other day, it would probably be like 15 to 20% A setups. The rest of it, the other 80 or so percent, split between B and C, being 75% of that other 80% being B setups. Yeah. Very few C setups I will trade. That's just me. I know some guys in here love it. Like no matter what it is, like I want to, they got to click. But for me, I'm just a little bit more controlled. So majority of them are what we're about to get into here with these B setups. Something like this. This is recently, this is back on the 8th. Clear trend. Like we see the drop in hindsight, of course, but it's clearly in a downtrend. Why? Look at the liquid 50. It started in the buy zone and fell into the sell zone. So that's where you give it the first knock. That's where you say, okay, this could be better. On aspect number 1, it could be better. Aspect number 2 would be your EMAs. Factor number 2. Could your EMAs be better here? Definitely, right? They're not in a fanned out trend. They're all tight together overnight. You're getting the breakout here. In my notes, I wrote a C setup, but I put this in the B slides because after looking at it more, I really do think it's a B setup. The only thing I see wrong with this is the swapping liquid 50 and the EMAs. It breaks the zone beautifully, set back here at yesterday's low. You see that? So again, talking about the yesterday's low kind of level things, that's where it starts. Look at how it tests it again as the day goes on, right? That's that low. Test it again here. Here we get into it. That's where I'm like, okay, maybe we're doing something. There's that, there's that retest right there. 3 candle formation breaks out. Now, some of you will say, come on, don't be like that. We were doing so good. There you go. Some of you will say, Austin, what about this formation? 1, 2, 3, 4. Why would I not enter on that 4 candle formation versus this 3 candle? Here's the 3 candle at the close. Here's the 4 candle. Give me some reasons. It's all over the place. What else?
Getting close inside that first shelf.
Bang. Look at the level just before you go past that.
This is the zone.
Doesn't break past that previous consolidation, and it doesn't break past the zone that you tested 1, 2, 3, 4 times already. Everybody see that?
RSI is slightly rising at that time.
Better than that, trend line is rising.
That's what I meant,
Trend line is rising. Definitely trend line is rising. So when that 3 candle presents, 4 candle presents right there, you wait. Don't get eager and jump in, because instantly this thing goes right back up. And you'd be like, what the fuck? You know what I'm saying? Instant.
That candle probably looked like it was through the trend line at the close of it, but then you can see as we know they lag.
It comes, so what Eric is saying is right here.
It almost like uncrosses.
You can see the RSI is through there for a quick second. But why it doesn't hold through? Rising trend line. Price didn't break the zone. Just wait. Guys, this is 45 minutes later. That was 8 o'clock. This is 8:45. It's a new low a day. It's a 3 candle formation. Now, another note on this. That right leg of this 3 candle, 1, 2, 3, this right leg, who knows what's up with? Right. In 3 candle formations, I will break the rules. Break the rules in a situation like this because I have hundreds of these 3 candle formations that look like that still work. If it was super far off the 8 EMA, meaning the body here was not off the 8, that's where I would say no. But that is, to me, a 3 candle formation. Anybody have any questions on that? Correct. Because with these formations, what we're essentially saying here. Oh wow, look at that. There's your GCHF, Ryan.
No, take a look at the one that it fell.
That EU real quick. It's interesting. He's been waiting against somebody.
Very small divergence at the bottom.
Yep. You're looking at EU again? Yeah. No, you could definitely. So now again, you could. Let's talk about this. What do you see? I'll just start drawing shit.
I have already marked it out. I see L15 the buy zone, right? But it touched the testing range 50. EMAs is uptrending. It's outside the range. I'm guessing from being high of the day. There's no dark. You have divergence on it. On the 15, right?
So here's what I would tell you. Pretty close. I'd give you a B on that. Here's what I would see in this. So we were looking in here on the 1 minute for divergence to see it retest high of day. You're trading within the Asian high and Asia low. It's still in the Asian range, right? This divergence here, to me, would signal that we probably won't break past that high. You have divergence now at the high inside the Asian range with a liquid 50 that actually fell towards the stationary 50, which could signal reset. So even with a candle like that, tell me, RSI looks good, but what type of formation is that? Not a 2 candle. It's not a 3 candle. I don't have a formation for that. Could it still rise? Could it go to the divergence? Yeah. But is that an entry signal? No. And this is where, again, being picky, yes, you need that fucking formation. Dude, you could read this and say, buy it at the top, stop down there. That's a no, it's not. It's not a 2 candle. It's not a 3 candle. It's just a bar with a decent RSI value, with a falling trend line and divergence on top inside the Asian range. If you took a trade like this long, it's a C setup. You're asking to really not make a lot of money. That's the nice way of me saying it. Does that make sense? Because I feel like let's just be quiet on it for now, and let's see where this thing ends up in 30 minutes. I'm glad that we're doing this too, because you guys can really see like how the market develops.
CHF, GPY?
Yeah, I'll pull that up, and let me draw the Asian range on this one.
And then after you look at again the GBP,
GBP CHF coming down now. Yeah, so I wouldn't be trying to look for divergence on the 1 minute in here, Ryan, because like this is under the 50 now, so this looks like it's coming down into something.
That's what I was going to ask, because it's at a pivot point.
So that could be enough to say it's a significant level, right? That it's at a pivot point, but I don't have enough weight on the pivot points to say. Okay. When we talk about the divergence stuff in the PowerPoint, you'll see that actually isn't one of the levels that I would reference too often. It's the least common one. I like EMAs better. I like high of day, low of day better, like solid price levels. The pivots, meh. Yeah, that's exactly. I think the fact that you're seeing like the break down to the pivot, tries to get back out, can't get back out past the Asia high, now breaking back down, I would say this probably comes at least to the 200. You bodied through the 50 pretty well, you know what I mean? You probably come down. Questions on this before we go back to the slides? GN. Okay. All right, so that was Euro JPY. Let's talk. Any questions on this one before I go forward? And also notice when we talk about exit signals, what's this green line? ADR. Right to ADR, never breaks the 8 EMA. Even if you fucked up and you got in on the first one and you got stopped, do not miss the re-entry. Do not miss the solid 3 candle formation. Don't leave that money out there. Never breaks the 8. All your money back if you got stopped. It goes 5R. Perfect liquid 50. Falling trend line. Perfect EMAs. What could be better about this? And you can read my notes for some hints. Say it again. Inside the Asian range? It's the first break. That right leg of the formation that I have boxed in, off the 8, that is the first break of the Asian range. That's why this is a B setup. 4. Pull back up, down, down. 4 candles. It's qualified to me because the right leg here closed lower than where we started. Again, off the 8 EMA, I'll fudge it. And the stop in a situation like this goes at the top of the 4 candle formation. It does not go at the top of just the right leg. And again, just don't get too caught up in the formations as themselves either. Look at the pins up to the 50 EMA. You see all that? You could put your stop right about there. Right here. See where my stop is? Right above those pullbacks to the 20, push downs off the 21, because if it broke back through the 21, I don't want it. I'm done. Follow me? So other than that, this setup is solid. This is a good B setup in my opinion. I want to talk just about this. Give me some input on that 2 candle formation right there. That is not boxed in. Come on, everybody say it loud. It's okay. Yep, right leg's not lower. Anything else you see about it?
The EMAs are too close. Reset.
Yeah, could be. Could be a little bit resetty. But zoom out, stay more in the focus of like the overall trend. This is good trend because you have the 800 way on top. You can't even see it. Then the 200, you see that, right? And then the 50. The 50 is going to be the closest one to price action when you're in full trend, because it's going to use the 50 a lot to dictate if it's actually ready to reverse and be done with that trend. The 50 is a really, really good EMA. I would say the least important of all of our EMAs is the 800.
So actually, I see all of the EMAs coming down, but I have the 800 in the bottom. Pay attention to it or not that much?
That's a good question. Probably have one of those coming up right here. Like that?
Like that.
Yeah. B setup. It's that right there. Look at the 3 candle formation that I have marked. Off the 21, off the 800. Nice pin up there, right? That's readable risk reward. You know the stop goes right above the entry candle open price above the 21. Because if it reverses up through, you don't want it. This is Euro CHF. This is the same day I traded Euro USD. Just notice when we talk about, I know we skipped a couple, but we'll go back. Just notice here, liquid 50s in the sell zone majority of the day. You have a peak into the buy zone here. That makes this a B setup, right? EMAs not being great makes it a B setup. Just notice we talked about levels. Shift candle right there. Not a clean shift, but do you see the 8 and 21 cross? See how it's crossing on the TDI 2 in the sell zone? That's a good shift. What did we say after a shift candle? What happens? How many times? At least once, right? What is that? That trade is your first pullback after a shift candle. Peel away all my other EMAs, that's a lot easier to see. But now that I'm saying it, I hope you guys can see it with all the EMAs. Still see it off the 8 and the 21. Still see it as that first push off the 21 after the shift candle. Does that make sense?
Yep.
I really like this. That trend line, the red trend line, falling like that into the sell zone, you like that. Picks up momentum, it's starting to tell you this thing can come lower. You like also, on top of the RSI, from this high here to this high here, those bottom points on the RSI, no divergence on the tops of the candles. Candles are still coming down. Everything is still holding that lower high structure. Does it make sense? Sosa?
Yeah.
Good? You look confused, I'm making sure. Exit signals.
Breaking the 21.
If it broke the 21, yep. How about, what would get you out of the trade? Maxes out ADR. Yep, goes right through ADR. So you're looking, entry price here, 101.14, stop at 20, so it's 7 pips stop. It looks like the, bless you, the ADR was at like 0.5, a little bit lower. So you're looking at almost 2R just to the ADR line. You know what I'm saying? The fact that it goes a little bit lower is even just like kind of like icing on the cake. But I would say just risk reward. Your risk here was very low, only 7 pips. You go get 14, you go get 20 out of this, good trade. Good swapping liquid 50, not great EMAs. You took 14 pips off that, take it. Risking 7, take it. Shaba, question? Good? Makes sense? It is. I mean, even on it, like again, the ADR on this is 32 pips. I've seen GN go 32 pips in 15 minutes. So, I'm with you.
300 pip news candle.
Yeah. Oh, the other day on the NZD news, yep. All right, let's go back a couple. I don't want to skip around too much. I think you just killed us, Rye. Nope, never mind.
Yeah, so you know where GBP CHF went?
Down.
Right to the 200.
All the way down. Just like I just said.
Pinned the
Hold on, let's take a look real quick.
That was too funny.
Yep, right there.
CHF chopping in that box.
That's where the new guys go long and they get stopped and they come back and they're like, wait a minute.
Right.
Wasn't that through? I've been there so many times when I first started. I'm like, what the fuck? But then you learn after you see it over and over again, wait a minute, that wasn't a good signal. That's why it did that. You know what I'm saying? Exactly. You just got to find that reason. All right, let's go to, this is AUD NZD, my favorite fucking pair. 55 pip ADR on this one, okay? It's a new high day breakout off the 50, off the 21. See, this is another situation where I'm calling that off the 21. Is it off the 21? Yeah, but it's also through the 21. You see what I'm saying, Ryan? Yeah. So to me, that 2 candle is still very valid. Why? The big kicker why is it never shifted down. The 8 never went under the 21. Had the 8 gone under the 21, that can't be qualified as a 2 candle breakout. It has to be qualified as a shift candle, which can make it a little bit more tricky. Does that make sense?
Wait, what?
It's okay. No, I'm glad you stopped me because you know I go too fast sometimes. Okay, come back here. Shift candle. First pull back to the 21. Second pull back to the 21. Third pull back to the 21. And anywhere in here, does it shift down? Never, right? Never shifts down. Fourth pull back, does it shift down? That's what I'm saying. Had it shifted down and crossed the 8 and the 21, that would be a shift candle.
Okay.
You'd have to qualify it as a different entry. That's it. Yep. Does that make sense?
Yeah.
Does it
I didn't catch it.
No, it's okay. Is it better that time? Good. In a situation like this, we're going to pick this whole thing apart. Shaba's probably looking at this, trying to figure out what the 1 minute looked like to see if there's divergence in there. Right? But that's what I want you to be doing. Why? Look at the trend on the 15 minute and the liquid 50. What's it say? Buy it. Buy it, buy it, buy it. If you can buy it at a lower price, wouldn't you? If I could get you that sweater for $50 cheaper, wouldn't you want that? Right. So if you could buy these currency pairs at a cheaper price with the divergence signal in a high probability situation, that's where I want to fucking be. Lower risk reward, or excuse me, lower stop loss, larger risk reward, larger take profit, right? But just like in that other example I showed you where you have the 15-minute formation like this and you could go to the 1 minute and find divergence, doesn't mean you have to. It also doesn't mean you have to trade off the 1 minute divergence. You could find it in here, I know Shaba, you've done this, and wait for the 15 minute to close and give you a good formation. And now you're like, well, shit, if I sit out on this, I saw 2 entries go by that I read, and that's not where we want to be. We want to be hitting the trigger on that. 2 candle, new high a day, no divergence on top. Even in here, that RSI point and that RSI point are not divergent to the price action. Rising, rising. With me? No divergence anywhere. The only thing wrong with this is it's AUD NZD and it's a swapping liquid 50. It's a good B setup for a new high of day. Stop goes right at the entry candle open price, right at the 50 EMA. Right, Chris? What's the stop there? 31 to 20, 11 pips. This is 11 pip stop, and it goes up to ADR at 65, so 30 pips or so. It's 3 to 1, just about. See, I can do quick math sometimes. With me on this? Any questions on this? Who likes that trend line starting to kick up there?
And also the cross.
That was at 10 a.m.
10 a.m., New York time. And it's AUD NZD, which is kind of weird, right? Yep. But I'll tell you something else. There was a couple of these recently. AUD breaking out at 9 o'clock, 10 o'clock, 11 o'clock in the morning. I'm like, what the fuck? But it worked.
So AUD actually is a good pair for us.
It can be. I would say AUD, like AUD JPY, you still got good ADR on that one, you know. But I think any pair works. It really does. It's just got to be a good entry. It's got to be a good EMA. Got to be a good liquid 50. It's got to have space on ADR. It's got to have space on pivot points. It's got to be off an EMA. Does this not look weirdly similar to this? Is this the same pair? No, it's CAD CHF. This is CAD CHF for a new high of day. This is AN for a new high of day. I mean, it's pretty damn similar, right? Here, the body itself is not off the 50. The body is actually just off the 21. Off the 21, new high of day, look at that trend line. Hooking like that is great. RSI value is above the trend line and above the liquid 50 at the entry point. Solid. What's wrong with this trade? Perfect. That's it. Anything else you see wrong with it? It's outside the Asian range.
Slightly falling trend line at the entry.
Slightly, but I think the candle before you might have started to, yeah, you might have seen it starting to turn up. More importantly than that, do you see any divergence on the bottom of the RSI?
I see a little bit on top.
Where do you see it on top?
Yeah, between 3 and 6.
Right here?
Yeah.
I don't know.
Yeah, just barely.
Like a high, high, high.
I would, yeah, I don't know if that's divergence. To my point being here, the fact that we got to zoom in that much and like squint at it, it's probably okay. Here, see how the RSI low for the day is here, RSI low for the day is here? What do you see here? Matches up perfect. That structure, right? Good. Talked about that one. We need to go back. Euro GBP right here. It's very similar to Euro CHF right here. Yeah, Euro GBP, me too. Not my favorite. But we got to look at setups. Here, like this is probably a C setup. Swapping liquid 50, right? It starts the day in the buy zone, hits oversold, and the EMAs to start the day were not perfect. You see how the 50 is above the 200? You don't like that. You like it better when the 50 is under the 200, and that's what happens at entry. So look at the 3 candle formation. You take the entry, right, into that is definitely not a great trend line, Drew. Not a great trend line. Everybody see that? Rising like that, to short into that, tough. So I'm giving you like, this is a C setup. This should be in the C setups. But again, we're talking about measurable risk reward. That's it.
So we got the formation, but we got trend line rising. That's a flat sign, right?
I think so. But I still wanted to mark it up so you could see it, right? Because with the stop at the entry candle open price up there, you know, sorry. In a 3 candle formation like that, with the, see how the right leg's coming through the 21 like that? You know the stop goes right above there. So you're in at 26, your stop's at 33, right? 7, 8 pips. This falls literally right to the ADR line. So when we talk about how do you get out of the trade, look at 2R, look at 3R, look at ADR, and look at the EMAs. Doesn't break the 8 EMA. Even after it's slowed down for 15 minutes after the entry, never breaks the 8 EMA.
After 30 minutes, you get that strong bar and that's...
Oh yeah, you break out for a new low a day right there. Right here, right? You close for a new low a day right there. Bro, you're taking some off probably, stop's locked. Just good winner, boom. Let me hit that. Because again, you're up now for in a trade, you're already in it when it breaks out for a new low of day, and it's a swapping liquid 50 and oversold. You did well. You got to be very grateful for that. All right, we talked about this one. This was a trade I took. This was on NFP. Who was in this trade with me? GBP CAD. Anybody remember? Shava, you the man, bro. This to me was a shift candle. Look at how that body comes through the 50 and through the 21. It's a shift bar. To me, it's like consolidation, and now we're ready to shift out. Where I get that idea, like that confirmation of that bar being the bar, is because the RSI at the close was above the trend line and above the liquid 50. That's why you need the TDI. Because otherwise you could have said potentially this bar, this bullish bar, could have been your shift candle, right? 8 and the 21 are close. If it had kept going up, you would have been like, oh yeah, that's it. But at that point, exactly. But then at that point too, look at your RSI and trend, it's not good for an entry. This is much better for the entry. So that was my shift bar. Shaba, you remember, I said to everybody, the stop here was not small. I was in at 52, stop at 37. About 15 pips. Look how long it took for this thing to move. Did he give me an exit signal? Dude, I'm sitting at my desk, always talking to the VIP, and I'm thinking to myself, I'm like, just take it candle by candle, right? Because I don't want to pull the trade and look like a bitch. But I also want to hold the trade if it's going to move, and I want to look like I know what I'm doing, right? So it's like an accountability thing for me to kind of show you guys how I follow the rules. It breaks the 8 and the 21 with a small bar. I would not qualify that right there, that breakdown. I would not qualify that as an igniting bar. It broke. It closed with a pin through the 50, which I really liked, and I didn't have any divergence here. Rising RSI, rising price action. So I'm like, I'll give it one more bar. If the next bar had come down through the 50 and closed right here, I would have been out of the trade, just like I was out of the trade a couple days ago on Euro USD and the GBP USD, the example I showed. Breaks the 50, I'd be out. It didn't do that. It held the 50, and I stayed in the trade and did really well on this thing. So in a situation like this, let's talk about what could be better. Give me some feedback on this trade. What's the first thing you see?
Range.
What about, like, what tells you it's a range?
From yesterday's high.
Okay.
You're just like within consolidation period.
Well, you're still in the Asian range when I took the trade. So, because again, if you're just, I don't even need the box. This is 2100. That was the highest pin to that point. Your box was from here to here. You were trading within the Asian range. So 100%, you remember Shaba, that was the main reason we sized down, is that it's an Asian range trade. What else?
Well, after the entry, you can see the RSI going back again.
Down through the liquid 50? Yep, and that could be a bad sign for sure. Yep,
Reversing on you.
could be. But again, that's where I would default to the EMAs for the exit. What about before the trade? What do you guys see right here to start the day? Swapping. Yep, so it was in the buy zone, had a lot of movement the day before. You can see that liquid 50's got to reset itself. And now here, you have a swapping liquid 50 inside the Asian range, 2 knocks, so it's a B setup. Make sense? Questions so far? Comments, concerns? Cool. No, you're good. Yep, read the notes too, they'll help you. This is GCAD. Why is it a B setup? Swapping liquid 50, starting in the buy zone, coming into the sell zone. EMAs are good, but it's a swapping liquid 50. So you get a shift candle with a really nice hooking trend line there. RSI closes through, the value looks good. Your stop would go at the entry candle open price plus your spread, so somewhere up near here, right? Up where I have it about 88. It ends up pulling back, retesting the 50 and the 21, and then it ends up moving. Notice in there, what do you see? Yeah, off the 21. So let's say you didn't take the shift candle, right? If you did, you got a second entry. You waited on the shift candle because you said, you know what? It's a swapping liquid 50. It's 3 o'clock in the morning. I'm just waking up. Whatever your reasoning was. But more importantly, it's a swapping liquid 50, so I don't love it. So I'm going to wait a second. That's at 3:45. By 4:45, you got another entry. So then you're thinking, okay, now I've seen this twice. I should be in this to some extent. Does that make sense? Questions on this?
Well, you, after taking, let's say you missed the first entry and then you decided to take on the 300 formation.
Yeah.
Will it be valid if you put the stop on the first formation or won't be?
Don't, because that'll fuck up your risk reward. If you took this first entry, the stop should go somewhere above the entry candle open price plus your spread. If you took this 3 candle,
That would be too much.
your stop, yeah, it wouldn't be proper. Your stop should go right above where my mouse is. That's the entry candle open price. Your stop should go right above that. Because a really good 3 candle formation,
Shouldn't pull back. You told me that on the video.
it should go like that. Yeah. If it pulls back for more than 30 minutes, it's definitely beat. That was Euro USD. If it pulls back, it's beat. This is another double entry. So this is what I thought you were speaking about, Santiago. We haven't talked about this yet today, and this is important. So this type of a trade is technically defined as counter trend. Why?
The 800 below.
Good. But where's the TDI tell us to sell it today? Damn it, I keep giving you the answer when I say the questions. The TDI tells us to sell it today. So what do? You trust the TDI. TDI don't lie, right? Everybody say it. TDI don't? Good. So counter trend, we're selling it, we're short biased. What else do you think is wrong with it? What could be better about it? How about that?
What could be better?
I'll give you one.
Well, on the first
Maybe-
formation,
Okay? No.
on the first formation, you can see the 200 is kind of with the at the bottom of the 50.
And you would-
not lined up properly.
Perfect. And if you were really doing a good counter trend trade to the 800, you would want the 200 above the 50 because it's almost like in a setup like this where you're trusting the TDI, this is the basketball hoop. That's your goal. That's your end zone, right? When your EMAs aren't perfect like that, you got too many linemen in the way. Stupid example, but you get what I'm saying? If you can get those EMAs in full trend, all the EMAs now are telling you that this is your floor. The rest of them are short biased. 200, 50, 21, 8. That's the short trend. So here, 3 candle. We like that 3 candle, right? Everybody kind of sees that 3 candle right here. But like Dennis is saying, the 50 is above the 200. So let's say you waited, right? And even though there at that entry, look, RSI was in the proper position at that entry. It was a flat trend line, but that 3 candle was a proper entry. Here, as time goes on, look at how it's off the 21 again, another formation, new low of day this time. That one is again where if you missed the first one, it now just broke for a new low of day off the 21. At that point, look at the RSI, it's under the trend line, under the liquid 50, right? That's now saying you got to be in this trade.
And the 200 now is on proper trade.
Exactly, and that's why I would feel more confident to take that second entry. Here, talk to me about exit signals. I just told you in a setup like this, write this down if you don't have it, you're trading in the direction of the TDI towards the 800 EMA. Again, in a setup like this, you're always trading in the direction of the liquid 50, but here, you're going towards the 800. So talk to me about exit signals. How do we get this whole move, or are we out here, or are we out there? Talk to me.
I'd probably get out of 2 hour considering it's counter trend.
I like that, 100%. What else?
After that, once it's the 800, you have divergence.
Exactly.
Well, and I believe, let's say you get the 2 hours, you move your stop loss at entry price, you get stop.
It pins you, right. So that's the first thing, which is why, remember when we started the conversation about exit signals, I don't think you were here for this, I was saying on A setups, you can lock the stop and try to hold it. But on anything less than that, B or C, you might want to just take the whole trade. You know what I'm saying? Take the 2R, take the 1.5R, bag it, because like you just said, it's counter trend. It isn't perfect. It might still come lower like the TDI says it will, but it might do all that first, and that can hit you out in profit. Does that make sense? So here, I definitely like what you're saying. So you're in at 34. It drops about 35 pips right here to 87.99. So just say that's 88 flat. So that price right here is just about there. So you could almost get that 30 pips, 35 pips right off the jump. You know what I'm saying? And that's going to be at least 2R, considering your stop there is 4. Yeah. Right. Right. Cool. And I mean, for GBP AUD to get a stop loss on it under 15 pips is a good setup, right? We like that. Yep. Yep. And I like the fact that, again, we're talking about levels today, so that's good. What do you see in here? Ready? Shift candle right there. You see that 8 and 21 cross down right there because 8's above the 21 right there. Shifts down right there. Pull back level 1. Pull back level 2. Pull back level 3. And that's basically where the move is done. Make sense? That's why I don't trust levels too much, because as you can see, it's kind of vague. But just note it. If you're trading level 2 or level 3, it's better than level 5 or level 6. Because at some point, it's not going to continue to hit the 21 and move in that direction. Ryan brought up a really good point too, and this is something I like to use in any system entry. RSI low, so everybody can see. RSI low, here, right? Price action makes a new low. Did the RSI make a new low? What's that called? So what's that called? Divergence. There it is. So with divergence building on the bottom at the 800, the next thing that would signal to me it's coming up would be a break of the 50 EMA. Now, it never does that. It never breaks the 50 and comes higher. But as this builds, you better know that a reversal could be coming. I talked about it in one of my videos. I think the way I said it, I liked it. It was divergence doesn't mean a reversal's coming, right? It means change is coming. Something's changing. Reversal doesn't need to be the answer. Chop can be the answer.
That's, I think, the problem with a lot of this is that, like, we think it's reversal, it has to reverse.
No. How many times have I said that to you, Shaba? On these D2 trades. He's doing counter trend stuff. I'm like, I see what you're saying, but it could be chopping. It's, oh man, that's all this is. And even to the point where, like, you wouldn't think, not saying you wouldn't think, but you would, I think, innately, if something's overbought and over ADR for the day by 10 pips, you would think you could probably sell it and bring it back down. It's overbought. ADR is maxed out. It's probably done an average day. It'll probably come back down. Bro, no. So wrong. It'll probably keep going higher.
Honestly, if that's what it was, you probably wouldn't have a career teaching this.
Right. But that's what I'm thinking. But it would be too easy. But that's where, like, and that's even Shaba's GN trade today. It was at the 800. It's basically maxed out ADR. All it did was fall all night. You'd be like, I could probably buy this off the bottom. No. It knows that. It knows that's what we're thinking. Too many people try to trade that way. Who was I talking to recently? Who was it who worked with someone who their whole system was calling reversals? Maybe it was Forrest. He just walked out. Someone I was just talking to recently said they were working with someone before us. Their whole system was calling reversals. And he was like, yeah, I might get, a 600 pip trade, but I also lost 4 or 5 of them before that for 75 to 125 on each one. Yeah. Right.
That's what Ricky does.
Huh?
That's what Ricky does.
Yeah. We were actually, I was thinking about you today. I want to hear about how that's going. Did we just lose it? So real quick, here's...
You can check the CHF.
Yeah. Here's GCHF real quick. Look how when it came down through the 50 here, now down to the 200 with the body through the 200, this could stay here for a little bit, maybe like a little retest and continue lower.
On the 1 minute, you have 2 hits of divergence up top.
Yeah, right there. See how price action's rising and then falling right here. Yep. Breaks the 50 and then it comes down. You said look at CHF JPY as well. Where are we at here?
Just chopping inside the zone.
Yep, still inside the range.
EU pin the divergence.
What if we go to the 1 minute on EU though?
On EU.
EU, not EM.
Say it again. So like what
1 minute right now.
right now?
Yeah.
For what? To try to sell it?
No. For the closure of the 15 minutes that we were talking about divergence, what if we go to the 1 minute and see what was going on exactly?
I'm not following you exactly. Are you saying on the top or on the bottom here?
The bottom.
So like down here where I have it marked? So I have it marked right here off divergence on the 1 minute. That's what's marked here. The reason why I was looking at that this morning, Santiago brought it up, was because I'm in a long bias pair, right? Liquid 50 is long biased, EMAs are long biased. I'm in the Asian range, but I'm buying it here off a significant level of support. And that makes sense to me. The D1, D2 trades, that divergence stuff, in trend is always going to be more powerful. D1, right? You've got to find, and we're going to get into this in the next slide, you're going to find it off significant levels, support, just like you want to be selling it off resistance off the top, right, with these divergence ideas. So I have this marked down here if you go to the 1 minute, and we'll talk about this more once we have the divergence system covered, but look at how the RSI here, rising, that's your new low. This is where it was set. Price didn't break for a new low till here. So you got 2 hits to divergence, right? There it is. Now I'm looking for a break of the 50, stop right here, and let it rip. That's the trade that I'm looking for. And that's how this worked out. And you're going to see hundreds of these when I show you the markups. Even with the 2 hits. Yeah, we're going to talk about that, I think, a lot because it's a gray area. So the divergence system originally was designed to only need 3 hits. That was my original intent. We couldn't figure out if it was an RSI cross that would give us the entry or if it was something else on price action. We were going, and Drew and Shaba, you might remember this, we were going off an inverted S2 cross. Do you remember when that's how I was describing it? Basically like how here you would sell it because it's in the sell zone, right? It's an RSI cross in the sell zone. The original divergence idea was like this would cross up in the sell zone and you'd buy it there.
I remember that.
Right. That got disproved when I did more testing based on the 50 EMA, using the 50 because it is a solid EMA. It doesn't change like an 8 EMA. It's pretty substantial, especially on a 15 minute, right? So when we were, I don't want to get too deep into it because I want to save it for the slides, but the 3 jabs versus the 2 jabs, I think is probability factor. That's all that is. That's just like trading a swapping liquid 50 for this much of the day versus a perfect liquid 50. That might decrease your probability a little bit. It doesn't mean that it is not going to move. I think a lot of the times, Shaba back me up, you'll trade a 2-hit divergence, you might get stopped, but then see a reentry 45 minutes later, and you need that one to cover. And you still end profitable, but sometimes you're a little early off 2 hits. And sometimes it needs that time to build the 3rd hit. And I think
4 hits is much better than 2.
And I think that's like the thing with the reason why it works better now is because if you can find the 3 hits, it's going to be a high probability trade. If you find 2 hits and it works, that's fine. But more of them will be tougher than if you wait for the 3 hits. And the last point on this before we'll get back to it. Yeah. You remember when we were talking about this originally, Drew, the divergence, I think the way you said it was, it's always something that you want to be almost late for, right?
You want to feel like you're missing out.
So waiting for those 3 hits to me makes it so that you can be late. You know what I'm saying?
Can you look at Euro CHF?
Mm-hmm.
I think I'm seeing the
1 minute, 15 minute.
1 minute.
100%. 100%. I got 3 hits right here. RSI sets its low. RSI sets its low. Price action set a low here. And then this one is your 3rd jab. The way we're gonna skip through some of the ASFX stuff and really get into the divergence soon. The 3rd jab is qualified as the 3rd jab in this situation because price came lower than it was here. So you're gonna find reaction point 1, which is your RSI low or high, whatever you're looking for. Here you're looking to go long, so you're looking at divergence on the bottom. RSI low is reaction point 1. Reaction point 2 is price action low. Here. After reaction point 1, the next price action low is now your 2nd reaction point. Follow me? The 3rd point is going to be either when price breaks for another new low and the RSI does not, like it doesn't right here. See how it doesn't? It's higher. That's holding the divergence. That's a 3rd jab. Or if price didn't come lower than this price, if it just came right to it, but the RSI hit my trend line that I would have drawn like this, the purple line, if it snakes my line, kind of comes off my line, that would qualify it as a 3rd jab too. That 3rd jab is what's going to make these divergence trades more probable. Make sense? So yeah, you're seeing it exactly right. So keep an eye on this, Manoni. The thing about this, and we're going to get into this with the markups, I feel like I've said that more than we're going to get into it. With this though, you're under the 15-minute 50 EMA, right? Look at your 15-minute chart. Yeah, that's the 800 EMA on the 1 minute right here. Being under, it's another probability factor. It's going to decrease the probability of your trade. You'd like to see it above the 50, holding above the 50. So if we go to the 15-minute, okay, another thing that I see. So not only are you under the 15-minute 50, you have divergence on top, falling RSI, rising price action. In a situation like that, I would not try to go long into divergence again on the 15-minute. If I can find 15-minute divergence, I use it to keep me out. Make sense? And I have a bunch of slides in the next one that actually show you exactly that. So okay. AJ. Santiago, this is another one you were saying, like what AUD pairs. This is 9:30 New York time, AUD JPY, and it works. Another setup, just like the previous one, counter trend. Not as great on the TDI with this one because it's swapping, and it's actually in the buy zone longer than that previous markup. But where's the TDI tell you to sell it? Fuck. Tell you to I like how most of you aren't even picking up on it until like a couple minutes later. So where's the TDI telling us to sell it? In a situation like this, Dennis, remember what you were saying about the EMAs?
Yes, sir.
Look how at the point of the entry, look how the EMAs are better. You got the 200 above the 50, right? So that looks a lot better. That's a really good 3-candle formation. Does it look like a shift candle to you?
No.
Pretty damn close, but it's not.
Yeah, because it looks like they almost overlap, but not quite.
Yeah, the 8 stays under. Lays with it for a little too long.
Yeah, right.
Where'd you go where it actually looked like it overlapped a little bit? Was that a different time frame? Or was that something else?
I'm trying to get this to zoom in, right there.
Yeah, it's real close, but it never.
Is it
went
left
above.
out?
It's still underneath it. There is no cross up there. So that's what qualifies this as a 3-candle formation. And look, that third leg, I love how this breaks past all this. That's so solid. Past this pin, you gotta love that, you know? From there, look at the measurable risk reward. 9 pips to the top of the structure. You trade it right to the 800. This is 27 pips. The 800 was about 74 flat. You're in at 74.21. So you're talking 20 pips down. 10. That's a 2-to-1 counter trend B setup. Like that's money. Your take profit is at the 800. You walk away. Where's the exit signal? When you get your take profit hit in 45 minutes because it never breaks the 8 EMA in the other way. Follow? It's a good trade. And I like this. I like these a lot because there is not a single thing earlier in the day that would be interesting to me on this, and that is the only formation, even when it presents at 9:30, that I would look back on and say that could have been a move, and that's why you would take the trade. If you ever look at something and you're like, that could have been a move, that's a sign that you might want to be in the trade. You know what I mean? The big thing that I've been saying lately is I don't want to look back on this in 5 hours and be like, oh, I should have been in that, like knowing that it was something.
And I understand since in the first formation, I mean, it's kind of a big candle, so we avoid that basically, and there's a swap right there after the
So like, if you're saying
Yep.
this big right here.
And then there's a L50 swap one.
Right here, yeah, it swaps right before. Yep. So like here, you could, if you were looking at this, again, there is no shift in there. You see that? It does not shift. Sorry. Come on. We'll get there. It doesn't shift up. 8 stays under the 21. So in a situation like that, you could look at this big candle, enter here as it breaks for a new low of day, and stop would go right there, right? The thing with, huh?
No, I'm just saying that's like super overextended.
It's overextended, right, exactly, yeah, say it louder. You're right, that's overextended, and the stop is gonna be so far away, you're not necessarily wrong, because you're looking at the trend using the TDI, you probably have the right direction, but look how long that basically chops.
So the candle and the swapping L50 will be like,
Dude, again, if you're up for that one, that big new low of day breakout, but it kind of looks overextended, just wait. Don't take the trade. Wait. If you've been short biased from here at 3 in the morning, and then this presents here at 9:30, now you can have a little more confidence to say, man, I'm following my rules, I'm sticking to my original bias. This is now the second entry signal. Am I really gonna let this pass me by? Probably not. You know what I mean? Good questions. I know, don't start with me, bitch. All right, Euro NZD, that's a beautiful shift candle. That's off the 50, that's through the 21. That's a pretty good looking liquid 50 too. Here's your changeover of day. It just started the day in the buy zone. And this is a gray area, right? Like some people will look at this and say, well, Austin, It's a perfect liquid 50. And I'll say, no, it's not. Nuances. No, it's not. You can say it is. That's laziness.
So a perfect one will be swapping before the day ends.
Bro, if this was just down here until that, then I can call it perfect.
So this is because of that.
100%. But on top of that, like again, if this wasn't the rest of the trade, then I might fudge it and give it a little bit more on a B because it's so close. Exactly. What else is up with this trade though? Look at the EMAs. Yeah, your EMAs are shitty. You're trading underneath the 50, you're trading towards the 200 and towards the 800, right? So not great. But from the shift candle, what happens when it gets to the 200? Bodies through it. And what does that mean? That it'll probably keep pushing.
I mean, not the 800 is supposed to be.
The 800's below it. See it at the bottom? So yeah, so if it bodies the 200 and your TDI says sell it, you think that's coming down to the 800. Look at, like, and Drew says this, he said it earlier, so I'm giving him credit. Break, pull back. Now, real quick, where does that pull back to? What level, when you see this pullback, what, 50 EMA? I hear Ryan, you're saying it. 200, what else? Ryan, say it louder.
Low of day.
Look further to your left. Pin, pin, pin. Those three things are more important than those EMAs. EMAs move, bro. Price doesn't move like that.
But let's say you're trading that.
Yeah.
Counter trending, you hit oversold, take profit.
Yeah, exactly. It hit oversold. But listen, in that first push, you're in at 96. Your stop is 15 pips. It goes to 28. I mean, you're getting 40 pips out of this thing.
4R at that point.
Yeah, that's what I'm saying. Like you're getting 40, 45 pips, no problem. What was the video? Pips before breakfast, right? That's like this, yeah. Any questions on this? So this is a B because of the counter trend and because of the swapping, but mostly the counter trend. Look at the hooking trend line when the shift candle presents. Really take note. And again, I gave you guys all these slides. I want you to go back and look through all these later. Look at how that body comes off the 50, how the candles before are coming down, right? And look at how clean that risk reward is to measure. You know that those 4 candles are showing you where you need to be. And if it broke back up through that, you wouldn't want it. Yeah. It's quick stuff. These trades are really good because you should move into profit quickly. Okay, good. Let's talk about a loss. We can't just talk about winners, right? I was in this. I think I was. Maybe. I mean, Aaron from the UK, shout out to Aaron, he might have been talking about this. I don't remember if I was in this or not. I don't think I was, actually. No, I think I didn't like it. I don't remember why. Let's look at it. Swapping liquid 50, first of all, looks like it's in reset basically most of the day, right? Starts in the buy zone, comes down into the sell zone, but not after hanging out at the stationary 50 for a while. So the TDI could definitely be better. 3 candle formation. Everybody sees that off the 50, off the 21, right? We're with that. It drops for a candle. You're in at 85. It drops to 80. You're up 5 pips. It turns right around, breaks the 8, and then with a strong bar, shifts back up through the 50 and the 21 stops you out. Okay, you're in the short position, you take the loss. Life goes on, right? You look back at this, what do you see after the push, the slowing, and the pull back through the 8? By the time it gets back up through the 8, right here, right, when it comes back up through, your divergence on the bottom is set. And what can that tell us? That if it breaks the 50, it's going to go full reset to the 800. That's the D2 idea. So as soon as you see 15-minute divergence set in like this, I'd get out of the trade. Telling me that it's going the other way, I would look to get out of the trade. Especially if I'm in profit when I see it lining up like this, I'd wash out.
Would you enter for the D2?
You know I don't love the D2, but I think some people would. But here's the issue where you're going to run into that. You remember the first recap that I went over was GBP USD, where I got short, got stopped out. I was up a little bit, but I got stopped, and then I could have gotten long, I was saying. Do you remember when it broke the 50, but I stayed patient, found a good divergence entry, went back short, and made my money back? That's in a situation like this. That's where, like, yes, you could take that long, and it could go to the 800, but I would probably still be short biased. To the point, almost, where if it did pull back to the 800 up there, and I lost the first trade, if I was really, in the zone, feeling like I want to trade, I would look for short entries up at the 800 off the divergence, even up there. You follow me? I would still keep that original short bias if that's what the TDI and EMAs are telling me to do. So, cool. Another one, another loss.
Oh, I took that with you.
This one, you remember this trade?
Yeah.
GBP CHF. So here, like, again, this is an example where you should have I did, didn't I? I went the other way. Yeah, we did it together. Yep, I remember. So we took the breakout. 2 candle, perfect EMAs, perfect liquid 50, right? It looked really, really good. Look at my note. It's a B setup, kept us long buys, no divergence on the top until after the push, doesn't break the zone on top. So the zone is set back here, the initial high, yesterday's high, then gets retested here, right? And here, if you look, excuse me, because of the RSI coming up and making a new high a day, and if you match that point, you get divergence. You have falling RSI, or excuse me, you get confluence. Yeah, so you have this falling RSI kind of rising into this pennant, and we traded right into the zone. So we get into the zone, right? And we got stopped. When it comes up into this zone, what is it now creating even more? Because that's a new high of day. Now we're building divergence on top as price is starting to rise, but the RSI is still here falling. There you see on price, I don't have it marked. Do you see what I'm saying? Price is rising, this is falling. Now you're building more divergence. That was when I said to you, this could reverse. I was out early. Well, yeah, because as soon as it broke here, I was done. I saw the hits on the high. Yeah, I think it was like 6 or 7 pips. It's on my Instagram, so it's up there. As it broke back down, me and him were watching this. We're like, we see the lines, we see the yesterday. I see yesterday's high, bounce off. A minute, bounce off. And it came back down. I'm like, okay, it's not ready to break. Then after all of that, where it can't even get back up into the zone, that's where I said, well, if this breaks the 50, we can use the high of day and take it down to the 800. That's exactly what it does. This is full reset. Full reset, Santiago, like I was telling you, bring the EMAs together. Liquid 50 coming towards the stationary. Full reset. Resetting the EMAs, resetting the trend. Think of it that way. So here, the reversal entry would have been here, and that's where I was short. I took it to the 200, covered the trade, covered the 7 pip loss, and I was out and left all this money on the table.
Damn.
Yep. But again, where was the exit signal on that counter trend? You see it, Victor? If you took it short here on the break of the 50 as a reversal idea, where's the exit signal taking it short? Yeah, that's it. So I bitched out. So when you ask me, why don't I hold my trades? Just showed you why, because I'm a bitch. But again, I was caught up in the money. I lost 7 pips. I hate losing. I was up 14 on the same size. I was up enough to cover. Looking at the money. Fucked me up. That's it. Right.
Yeah, I remember you took it down, and that night I had 30 pips on DJs. I wasn't worried much about the loss because it was like 6 pips, 7 pips up, and I just didn't trade anymore and just let UJ run.
That's probably like, literally you took the words out of my mouth. That's what I was just thinking. I was like, it's hard sometimes to say like, I'm gonna take the trade after taking a loss, and then I'm gonna leave this other second trade going the opposite direction. I'm gonna leave it on. That is not who I am as a trader. Like, I know myself better than that. Like, I know I'm better off on that GU example. Get stopped out short, get me back in short. That's where I know I'm my best. This worked out well for me, though.
And then journaling that trade, I said to myself, why you entered? You already had 30 pips running.
It's a good point.
So I'm like,
Picky. Be picky.
Yeah.
So we're looking at Euro AUD. It's a 3-candle formation. This is going to talk a little bit more about the levels. So liquid 50 looks great. Your changeover of day is right here. Liquid 50 is perfect in the sell zone. What do you think is wrong with this trade past that? Beyond that, I should say.
What is wrong?
Yeah.
It's ranging and it's a zone.
Okay. The zone from yesterday's low is the issue. So if we look at the entry here off that 3-candle formation, right? It's a new low of day. That right leg closes for a new low of day. It stops for 15 minutes, pulls back to the 21, doesn't break the 21, comes down for another 15, and then it's gone all day. Turns up against you. That's exactly it. So first, we went over an example, and I believe it was you, Eric, that said I didn't take that first 3-candle because it was still in the zone. The next one, 45 minutes later, broke the zone. That is poor trading in this situation if you were to take that trade because it did not break the zone. If you can be smart enough to look back and draw this box, you can't go short here without it breaking the box. Had that closed through, even a pip, I would look to then say, yeah, we can trade that short. After it pulls back and it doesn't move quickly, that's where I would be like, this is probably not the best trade. from here, rising RSI, falling price action. And if we were to draw those lines on it, what it would look like as price action was coming down is you would see it like hitting this line, bouncing, hitting the line, bouncing, through the line, bouncing. So you would look at it as just hits off divergence, never a break of the divergence. And in order for us to go short in a situation like this with divergence present, we need them both broken. Price action and the RSI, both broken. Questions? Take another note. Flat trend line, super flat, not ideal. We want better trades than this.